Hello and welcome to LecherCast. My name is Brian Krogsgaard here with Josh Olswich. Hey, Josh.
Mr. Brian, it is so good to hear that Alabama twang once again.
Where have we even been? My system was completely, utterly wrecked. Now it's back. I'm back.
We're back, baby.
We're back.
The meat is on the menu.
The market is not back. The market is lame.
Look, I think people who know me and know much about my analysis know what I'm going to say. So I'm excited to say it.
Yeah, well, we can get to that in just a moment. Actually, we can get to it right now. We have nothing else that we have to say.
Well, let's see. Russia went to war with Ukraine the last we spoke.
Let's recap all of this news.
I just want to think about where we are, where we've been.
Yeah, it's honestly, it's depressing. The world decided, hey, we're going to do war again. So that's fun. So Ukraine is under fire, under siege in some places, I guess, maybe. A lot of stuff going on over there. It overall has not been good for markets, adding tension. We've seen actually markets shift based on specific news events, true or untrue, coming out of the region.
That's the most important part. True or untrue, news is affecting us. Like this nuclear power plant melting down, obviously, that's not what happened. I'm just embellishing here, but nobody wants that. But there was some concern as to whether or not that was true or untrue, and it didn't matter because the market
used it to dump futures right away. Overall, I guess you could say, considering there's simultaneously a direct war between Russia and Ukraine that's turning into a bit of a proxy Cold War between Russia and NATO countries. Considering that we're not at 20K, so there's that. But it's not good. Things are a little dicey. The market's simultaneously nervous and also uncertain. Like there's some pricing happening in terms of like rates and assumptions that the Fed will not be as tight because there's more uncertainty with war. I hate kind of talking about markets as a first caveat. I hate feeling like we have to pay attention to markets when there's things like this going on. At the same time, like the market's going to be the market. It's going to continue trading every day, no matter what. And I certainly can speak for both of us. Like we're not going to root for anything to for the harm of anyone for the sake of our positioning ever. And it just makes it to where, we should qualify. Like we both are rooting for the safety of an entire region and for the end of a war, no matter the impact that has on, our financials. But we should be able to talk about world events in context of markets in addition to other things, in addition to the events themselves. So we will discuss it. We will talk about the impact things are having on markets, but I'm certainly hoping for the best, hoping for cooler heads to prevail and for peace to find its way to Ukraine. There's my spiel.
Yeah, I mean, I agree that I'd rather be on a deserted island and not paying attention, right? But you can't put your head in the sand here and not realize what's going on because obviously it's impacting everything. Commodities, especially, just absolutely roofing to all-time highs, limit up, like just the worst type of thing imaginable in a real world practical sense where people are going to have to choose between medication and food. Like it's going to get bad with energy, especially mixed in all of that. Obviously, gas prices rising consistently here around the world, even in the US. It's just a whole ball of terrible, all of it.
Yeah.
I was trying to find this David Z. Morris sentence in this article he just put out today for CoinDesk. He was talking about basically what you said in the end of your statement there. We're not going to root for for war because Bitcoin's doing well. I mean, that's clearly not, I don't think anybody's necessarily suggested that, but it's important to realize like
Yeah.
I'm rooting for the individuals in Russia, the individuals in Ukraine who had no part of this, were no part of this decision making process, and are seeking a way to, an exit hatch, if you will, a financial lifeline. And if that's Bitcoin or whatever, that's why it's here, right? Like we were built for this stuff, literally. Like, so if people are going to use it, I'm happy for them. I'm happy that it's a tool that they can use, whether or not price goes up or down. For me as a trader is like, okay, whatever. But for them, it's a different animal altogether.
Yeah, and I hate that, we're now like the US is engaging with NATO in an economic war, and that economic war affects the people at the bottom first. And so I think it's tragic that Russians are being individually impacted here when you're trying to put pressure on a regime, but you're doing it by squeezing the bottom of their population, the most vulnerable of their population. And that's really depressing. I was, in terms of markets, like I was already bullish oil, bullish gold. I've talked about that on this market.
You were, you said,
yeah,
you said oil to 200 or something like
yeah,
4 weeks ago, whatever it was.
Yeah. And now it's whatever, 114. And, we're seeing gas prices start to respond. Like, I think there's going to be serious, and I talked about it then, I didn't know what triggers there would be, but I did recognize there would be serious implications, serious social uprisings and sociological problems in the world as a result of it. And I think this is just putting an injection of, steroids into the same problem that was going to occur anyway. And now we're, talking about taking a country's oil off the market and providing uncertainty amongst energy prices due to, two major commodity providers being in this situation. It just sucks all around. And yeah, the whole world will feel it. And I hate war. I hate going to war. I hate anyone advocating for war in any circumstance. But what we have on our hands is a war. And yeah.
The two things that stuck out to me were these SWIFT sanctions, obviously, which the U.S. did not want to do, did not want to participate in, and has mainly been led by the Euro people, and has been successful as far as sanctioning banks off of SWIFT in Russia. But this headline from Reuters, I don't know if it's today or yesterday, that the two major banks that the EU uses to pay for energy aren't included in those SWIFT sanctions. That's interesting. And then the second thing was Shell gas buying Ural crude oil at a major discount because futures were in the negative. So it's like we say one thing, we do another. We want sanctions for Russia, oligarchs, whatever. But, these two banks, they're okay. We're not going to buy their stuff, but, we got to buy this oil anyway. Like, okay, let's get real here. Like, and you've got U.S. senators worried about crypto. Like, let's get our priorities straight here. Okay, crypto is not a problem. Good luck trying to launder money, billions of dollars through crypto. It's just not going to happen. It's not going to happen.
Niraj has been on
the offensive
path, basically saying like it's impossible to hide that much crypto. I mean, even like people talking about the ruble, it's like $30 million of activity daily instead of a historical maybe like $15 million. It's like, come on, that's not like, we're talking billions and billions of dollars amongst these oligarchs. They are not escaping to Bitcoin. Lumber futures back to their highs almost. How about that for a rebound? What? How about a monthly chart? It makes it seem less obscene. It's even more obscene when you look at it here. I mean, pretty much any commodity, you name it, it's running unless it's called Bitcoin. Bitcoin not participating. Gold.
Well, that's the question. When is Bitcoin going to act like a commodity, if ever?
I don't know.
Is it too much risk on now?
It's acting like the NASDAQ, but it didn't even participate in the NASDAQ's version of the run up. Like it's getting like the rest of crypto acted like blow off tech stocks. Your Solana to 270 or what, 250, whatever it ran to. and subsequent breakdown, you look at that in linear, I mean, goodness gracious, looks just like a lot of these tech stocks that have gotten battered. But Bitcoin hadn't, I mean, it really peaked in my mind, kind of February 2021. Hadn't really done a whole lot since then. So over a year now of relative disappointing returns, and certainly doesn't exactly look like it's participating in a commodities run up, being treated much more like stocks or tech. So yeah, I mean, it's another data point for us, right? But in a world where like oil legit has gone vertical, negative to infinity. I mean, we talked about this so many times. Literally do not want your oil to all-time high is where we're headed, and it's unbelievable.
Is the Russian Ural oil futures even on TradingView? I don't even know, but they went to negative 22. I can try to find that chart where I have it somewhere, but yeah, just like crazy dislocations in the market on everything.
Yeah, chat's asking me to find wheat futures because it's just
part of the reason why wheat is booming too is because Ukraine is the breadbasket of Europe. At least that's how I've read about it. You know, I could be wrong there, but they provide a substantial amount of wheat to neighboring nations in the Middle East, lots of places.
I mean, that's a chart. 800.
I think they hit limit up. That might be frozen because it might have hit limit up for the day.
Yeah. When I think of these, I think about how like people talk about who trades these things, and there's like 4 big players per market. You know, it's like Bob the corn guy. You know, it's like, you're seeing lumber or wheat or corn or whatever going 6-7% one direction or the other. They're done for the day. They go limit up and then they go home. You know, and you know somebody ends up getting squeezed, or I don't know. It's just I don't know what to make of it. It's all a disaster. But
I think commodities, I could be super wrong here, but I feel like commodities are mainly traded in ETFs and things, not directly by most people.
Futures more than ETFs.
Okay.
Yeah.
Because there's like a Goldman Sachs commodities index. There's a USCI is another US commodities index.
It's certainly not just like retail doing it. It's market moves based on actual demands and actual positioning of institutional players that get offsides or whatever. But yeah, most of this activity happens in futures traded in short periods of the day, and then reflected somewhat in ETF exposure and whatnot. But wheat 40-something% in 2 weeks is kind of nuts. Anyway.
Yeah, I think volumes on everything, like on Binance, when you look at like people talking about ruble volumes or whatever, I think a lot of that is algo driven anyway. A lot of that is like ARB driven as well. I'm guessing, like I don't have facts on that, but.
Josh, is gold about to join the party of price exploration because it is on a weekly basis, basically at the level that matters? 1980 or so is its highest ever weekly close. It looks like an absolutely perfect cup and handle. I've said this several times over the past couple of months, but I think you could probably just put your net worth in gold and forget about it and be happier than Bitcoin for a while, like the revenge of Peter Schiff.
We talked about this again 2 weeks ago as well. Like if I'm on a deserted island and I know nothing other than the gold price once a day and the cloud, like I am long. This is a weekly chart. This is huge. This is a weekly signal on the cloud. Bullish TK cross, price above the cloud. That's an entry right there. Like regardless of what's going on in the world, that's a bullish long entry. We can add the lagging span to that.
The monthly signal will add whether you want to call it a cup and handle or something else. Add it to that, and it just looks like a breakout of a post consolidation range after a 10-year down move. So breaching a decade-long high with a bit of a blow off and then a consolidation turned into the handle, and now the proper markup phase. Like this is what cup and handles do. Talk about patterns. It doesn't get better. Like it's basically textbook.
It's textbook other than the duration. Like if you investigate what Bulkowski, who's like the chart pattern king, has said about chart patterns and cup and handles and whatever else, he tends to shy away from patterns that are like multi-decade, whatever this is, decades long. But it's undeniable, right? No one's going to pull up this chart and think, oh yeah, this is something other than a cup and handle. I mean, it's just the way it is.
Yeah, but if you look at it, okay, so if I add context to that, it's a 10-year consolidation of a 6,000-year traded asset, and it's after a 20-year a previous 10 or 15-year markup period, right? So $250 to $2,000 was this massive markup from the year 2000 to the year 2011 or so, and then now it's this consolidation for another 10 years into this cup and handle. So I think in context of that, I think it's actually okay from a range, like a duration perspective. But I don't know, maybe I'm making that up.
No, I agree. Like you got to put it into context, like you're saying, for sure. But no, this is even this like micro stuff from 2021 to January 2022. I'd argue all sorts of stuff, Adam and Eve, inverted head and shoulders. Like there's plenty of evidence here other than just this massive pattern. And like if you want to be conservative, you got to change my colors. But what 2.7?
Yeah.
2.4 to 2.7?
3K. It's a magnet in my mind. So this is a comment. I'm going to turn it into a question. Zcash Zealot says, I'd argue it's not textbook because the move only exists due to considerably unforeseen external catalysts. My answer to that is that that's all things, right? Like all things that are first in a chart end up with a catalyst. Now, the duration.
Are you saying we have a crystal ball, Brian?
No, I'm just
because that's my interpretation.
These things look for a reason, but it's usually like turning many knobs, kind of working toward a singular outcome, tweaking from many sides, and then you kind of have that final twist that makes it happen. And I think that this has been building for quite a long time, and this is what I would call a strong catalyst versus like a weak catalyst. And yeah, I think
it's got a fundamental driver behind it. That's for sure.
Right. When you have a fundamental driver to lead towards a technical breakout, there were fundamental drivers all along the way as well, right? That's what creates the chart pattern in the first place is the smaller fundamental drivers, the ones that don't get it beyond the brink. That's what creates this pattern, this tightening consolidation or whatever that occurs. These things are all made up of, actual events and psychological constructs that turn into this moment. And then when you have a significant catalyst, that's what allows you to have a larger breakout. That's why I've always liked charting stuff in the first place, is because it is the visualization of that psychology and the animal spirits of the market that you can see. Am I wrong?
No, I agree. I agree with you 100%. But when I say that out loud to people, they think I'm crazy, right? But
yeah. Well,
it's not about convincing people to use TA. It's like if I've made money with it, I could care less what anybody else thinks about it, right? I could care less if it's just some like fake bullshit trash astrological garbage. Like I don't care. It works for me. I don't need to convince you. I'm not here to trade your book. I'm here to trade mine. So like we're just talking about what we're seeing. So
yeah.
I just had a super dark thought about gold. If gold gets like nuked, like physically, in like let's say there's a nuclear war or something, right? What's the protocol for that? Is there a way to like?
If we have a nuclear war, then we're in big trouble anyway. So.
Yeah, I know it's way worse than gold. But I'm just thinking gold, like a vulnerability of gold versus a digital asset.
I think they're both screwed. So.
Yeah, clearly, but like the physicality of it.
I don't know. I don't know what happens to gold under nuclear pressure. I guess it depends on how direct. I don't know. It's a dark conversation. Let's talk about the digital assets. People are here.
So I'm just saying don't nuke Fort Knox because I don't think that's going to go well.
No. I don't think nukes would be very bad. It's kind of dark that that's even a thing, like a conversation. Like we shouldn't nuke each other. Like, are we not that? We're not that evolved as a species to realize that that's stupid. I think problem is you only need one nuclear powered moron to break that down, you know?
Right. Like I can hope that it doesn't happen,
Yeah.
but I can't be sure that it won't. Right. Like you're saying, like we're stupid enough to do it. So not we as a country, but we as a people. Digital assets. Yeah. I was watching this downtrend for BTC for the past like several months. I forget who posted this on Twitter first, but thank you, whoever you were, this pitchfork. We flirted out of it. We're trying to get back into it. I hope we don't get back into it on lower time frames, but again, like if we're talking about witchcraft and seasonality and stuff, like I'm just looking to Q2. I'm looking to potential bullishness into Q2, sort of regardless of what's happening with the Fed or Russia or Ukraine. That's what we're setting up for currently. That's my current viewpoint. I don't know about you specifically here.
I think all my boomery things point towards there being a path for up, but not a path for like a ton of up. So from a Bitcoin perspective, I think going and hitting the 200-day moving average or something would make the most sense. The other thing, though, that is definitely there is to just kind of chew through things on a downward consolidation. Like if we're going to not act like a commodity, you know, you end up kind of with this gross bearish consolidation on the downside. I do think there's a decent amount of room for absorption in the 30Ks, where people, I guess, continue to flow out of other digital assets into Bitcoin or flow into Bitcoin from cash. Like the dollar is strong at the moment, but it doesn't mean in a inflationary environment that we anticipate the dollar to remain strong, right? Sometimes you have liquidity issues and the dollar can be strong for a while, but it doesn't change the underlying problems where people don't really want to own dollars. They'd rather own other things. Well,
that's something else to talk about other than like energy and commodities and Swift is sort of the death of the dollar hegemony. How do you say that word?
Hegemony.
Hegemony. Yeah, I knew that. Don't clip that. The dollar hegemony, because we are encouraging this like multi-tiered system now, right? Between like Russia, China, India, and the rest of the world. India has already said that they want to like denominate things in rupees. China has said, come use our Swift system or Swift equivalent. Russia's developing or has developed their own Swift equivalent years ago as well. So that is definitely happening regardless of what the chart's showing as far as Dixie's strength, which is just really a measure against the euro mainly.
Yeah. Got asked if we have heard of the dollar milkshake theory. Yes, I believe it's Brett Johnson who is one of the champions of that. I think the basic premise is the thought that the dollar will become very, very strong before then it falls apart, which this may have the case for, right? Like this is another one of those things where, you know, weak dollar, inflation, yada, yada. But then what if the dollar goes to like, or Dixie goes to like 120, you know, which that would be a significant challenge.
And we've said this before too, like if Dixie's up, BTC is a hard time, right? That's just the historical anti-correlation, inverse correlation. If VIX is up, BTC has a trouble rising, mainly because I think the people who are trading it as risk on. So if you're trading it as risk on and it's a risk off environment, you're gonna sell or short, right?
Yeah, and
that's your viewpoint.
Our past couple of crypto market cycles have trended extremely well with the Dixie trends, right? Like 2017 was an up-only crypto year, and the dollar trended down. Bear market, March 2020, crypto bottomed, up-only crypto year. And now you see, we've been talking about why did Bitcoin suck in 2021 when the dollar has been trending up that entire time. So I think it's very possible that when the dollar peaks, let's say it goes to the same level, that can coincide with your next major Bitcoin move as well, potentially. Not to say that's some kind of lock, but it's certainly worth noting that Bitcoin did multiples in those Dixie down move seasons.
The most bullish thing here, honestly, for BTC is just to not make lows. It's one job. Just don't make lower lows, and we're fine. As long as we can chop around in range in the 2021 range, we're totally fine. Yeah. But once we start breaking those lows, it's going to get not so pretty.
You could even take that correlation back to like 2014 to 2015. Like crypto didn't really bottom from the 2013 double bubble or whatever until this move was done itself, you know? So it's not perfect. Bitcoin doesn't have a ton of history and the Dixie does have quite a bit, but it's worth noting. Like we can't ignore that, can we?
No. Even if BTC was tiny compared to what it was now, you can't ignore that. I was trying to pull up. Somebody was comparing Fed tightening to crypto cycles, and it's again a 1-to-1 correlation where when we have tightening, we're in bearish markets regardless, right? So if we do have tightening coming up, which we most certainly do, and to some degree, then that's not going to be. Yeah, it's not going to be bullish for BTC in general.
Yeah. Do you have headwinds or tailwinds? And the answer is generally we have headwinds in crypto. Macro headwinds. At the moment.
Yeah, sorry, I'm trying to find this image just because it was so good. It's like, yeah, here it is. It's like, it's undeniable. This was I forget the report, Stifel. I had never heard of them. They put out this report in February, at the beginning of February. Didn't mention Russia in any of it. They were convinced oil was going down and gold was going up. So their report was a bit off in that regard. But I really like this chart where they're comparing Fed tightening, Bitcoin relative to gold.
We look like we're in no man's land. This is no man's land. That's the hard part about this chart. We do not.
Yeah.
Like, could we trend to the top? Towards like the top of the range? Yes. Could we trend towards the bottom of the range? Yes. Is it a very easy place to know anything right now? No.
Well, that was their thesis was this will be bearish. Bitcoin will trend to 10K equivalent because Fed tightening historically has brought us to the lower bound. That was their argument. We can also pull up the 2-year MA multiplier, which is basically kind of saying the same thing. Just make sure I'm on the right time frame, the right indicator. Yeah, so we're in no man's land on a lot of indicators for sure.
Oh, no, that has us higher. Okay, I was looking at something different. Yeah.
So is anything screaming a buy here from any regard? I don't think so. But if
gold, just gold, nothing crypto.
Yeah, I'm just saying crypto in general.
Yeah.
Like for me personally, I like the DCA in the green, the 2-year MA multiplier. It's too easy to look at this and say, yeah, that's worked out. It might take 2 years, it might take a year, it might take 6 months. I don't know, but that's what I'm looking at.
Yeah. I think the other thing you have to is even in legacy market, it's like we're not in this strong uptrend area, recaptured trend, whatever. We're in the midst of some kind of retrace. You don't know when it's going to bottom necessarily. So that's also just another headwind. And how much could legacy markets correct? Well, they could definitely correct more. To say we know exactly where they'll bottom, I don't know. To your point, I think you might be able to, with a long enough lens, this is a fine place to dollar cost average, right? If you're trying to be,
well, if you think we're going to 100K in the next 5 years, yeah, sure, right?
But if you're trying if you're trying to be surgical or you can't stomach a 50% down move, then it's not,
Well, that's why you dollar cost and not lump sums, you know?
Yeah.
Like if you're truly price agnostic, then what do you care, right?
Right.
My whole thing is just based on historical levels above or below this zone, right? This has been a good buy. If we start to drift below 32K in this case, now the cloud is saying, again, just like that inverted head and shoulders setup that failed, but the cloud is saying, you know what? You got a pretty decent shot here at making a trade. As ugly as today looks, as great as the other day looked, right? It's finally saying, you know what? You got a shot here making a trade to 51K, which is just classic edge to edge stuff.
Yeah. And
what you want to see is this bullish DK cross first, which we haven't seen yet, but
I've always liked that kind of bottom of the cloud to top of the cloud edge to edge move as well. And it's also the Keynesian, it's also the 20-day moving average. Love that in terms of kind of risk reward. Problem I have is I was already long kind of heading into that. So now we're just retracing the part of the win that I had, and now I'm sweating it instead of like making a confident entry here and having taken profit at the equal high and waited, like I didn't do all that responsibly. So now I'm just sitting here wondering like, well, please go up. Cause if we go lower, then I might have to cut it and I won't like that. So, got some liquidity issues there as well. If other people are in a similar boat where they can't really stomach the move down, sometimes that gives you the justification for the move down. But technically speaking, I do actually think there is a positive risk reward trade here to make that kind of 50K-ish move. And it looks like we're just kind of repairing after a large breakup to the upside. Sometimes you get these big candles and then that thing's kind of have to calm down for a few days and get people sad again, and then you can actually do the real move. Maybe that's where we're at right now. I don't
know. I agree. Just like I feel like we have it almost every time. I'd have to like double check this, but usually when you have this like stab into the cloud, you get denied. We certainly did in 2019. I'll take a look at that, but this is that inverted head and shoulders setup that I got stopped out on. But Holdler me loves anything below 32. Trader me loves anything in this zone so long as this cloud setup stays intact. We talked about this, I think, 2 weeks ago too, but in 2018, 2019, this took months to play out. Mm-hmm. It pumped immediately on April 1st to the day, which is Q2. So maybe we do a bunch of nothing for another month. Maybe it's 2 months. I don't know. But this looked somewhat similar in that it had a failed inverted head and shoulders setup, a failed double bottom setup that morphed into this longer consolidation, blah, blah, blah. But ultimately, the entire time, arguably, we really didn't make lower lows that entire time. So again, this exact same thing is what I'm looking for currently. And you can see, again, just to highlight that pop into the cloud and denial, very, very similar, right? Like we had this massive candle, series of candles just get instant dumped, right? So yeah. I don't know. It's nothing we haven't seen before.
The problem I have is I just feel like we're swimming against the current, like the stuff that has momentum and the price doing what you want it to do on low time frames, price showing what you want it to do on high time frames is not the stuff we're in. And I have a decent amount of gold exposure, but nowhere close to the amount of crypto exposure I have. So I feel like I'm still like, I could 10x my gold exposure to feel more comfy. And that's, thanks to crypto doing well over a couple of years, or else my gold and commodities exposure would be more significant. So that's the other component of this. I think one of the headwinds is whether it's in tech, in passive strategies, stock market, Bitcoin, crypto, people have won for a long time. So like they can continue to essentially take those profits out. So you essentially have this sell pressure overhead as long as they're uncertain. Whereas
that's another interesting thing. If you look at what's moved on chain, we've had the least number of 3 to 6 month on chain movements ever historically, which is crazy. So all of this like this activity, this trading activity, has all been
on the margin.
Fly by night people who just got here, right? Like this is all trading activity, really. This isn't hodler activity. And my caveat to that is just, yet, because if we do break lows, if the traders ruin it for the hodlers and the hodlers get nervous and the hodlers start selling at 30s and 32s or whatever, then yeah, you're going to see trouble. Right. Right. You're going to, because that bedrock, that foundation of non-float, if you will, non-circulating supply gets unlocked at those, I'm assuming at those levels.
I'm just saying, when I look at this and I see like, this is where, this was the big daily candle or whatever, last week, the fact that we sideways and then now look at, that's not cozy. That is not cozy price action.
No, but I don't know. Again, like Q1 is always trash. Usually is. I'm not worried about it. Yeah, we have a war. We didn't have that in 2019. Yeah, we have Fed tightening coming. We didn't have that in 2019. It's like it's been a wait and see this entire time. So I don't know. Like let it have a temper tantrum.
So let's talk about what else is out there, right? We've mostly been focusing on Bitcoin because a lot of other stuff
Seek BTC?
Yeah. Well, a lot of other stuff looks pretty rough. ETH BTC, I'm one of its proponents. It looks real rough on like a daily and weekly time frame. Looks like it wants to make a lower low. Weekly this weekly is not comfy, right? Like maybe it's in a range down to 0.06, but that's not a comfy setup. It looks like a failed breakout and then a retest and then a distribution before a breakdown to me. I don't know how that fits in with the rest of crypto. That's dollars back to BTC at best, or dollars out of ETH faster than dollars out of BTC.
Well, I don't want to offend anybody when I say this, but rising ETH BTC is usually a component of dumb money entering the market. So to see the risk off from ETH and everything else down the line into BTC, like dominance is rising quite a bit as well. That makes sense to me.
Yeah, it gets, honestly, it gets even scarier if you look at some other stuff. Like if you look at Solana, I was actually long Solana for a minute, even though on Weekly Open I talked about how Sol BTC, while a decent risk reward, it looks like a shelf to death, lose this level and lights out meme, right? Like, yes.
Well, I do think one way to win in a bear market, if you're not trading spot fiat pairs, is trading these, like Sol BTC, AVAX ETH, people are saying in the chat. I'm just about to pull that up now. But that's one way to still make money in a bear market, right? Is to just trade something else that isn't against the dollar. AVAX ETH looks fine. I think Matic ETH probably would look fine too.
See, my thing is I don't think most of those will hold up.
I don't get super bullish looking at a chart like this. It's just a bunch of sideways, right? But doesn't look like Sol BTC where it's going to zero, or Tezos BTC. What does that look like? I haven't looked at that in months. Kraken, I guess, for that.
Like AVAX USD looks kind of scary to me. I mean, it's right on the 200-day moving average, which it's ridden, but it's in this like gonna decide soon. Don't know which one. I don't know. Maybe I just lost it. I don't have my conviction. Like there's been times in my life where I've had this incredible conviction where I just am like, all right, I'm extremely bullish. ETH 9 to 10K means we're going to 30K because we will not stop at 20K, and that's what we got. And then, seeing Ethereum back when it was $400 or $600 and thinking it's going back to all-time high, 1,400. And then you get to those levels and then you're like, now I anticipate, then you get price exploration. we're not in any of those zones now. You know what I mean? Like we haven't had a long bear market of or we haven't had a long even bullish consolidation. If you that could occur, multi-year type stuff. It just, I don't think we're in a zone where it's like a high conviction play.
No, I agree. I mean, I'll say it again. Q2, looking for that ascending triangle, looking for that E to E possibility. Could all get wrecked rather quickly based on war and Fed tightening stuff, but that's what I'm watching on a day-to-day basis.
And then, the chat's bringing up Atom. It has had days where it's like the only thing green and looks incredible.
Well, Luna too had a bunch of green days against everything.
Yeah, Luna's another one in that realm. I just keep it further down on my list, to my peril. I think it's because of access. I don't think Luna's that easy to buy. I don't know if it's on many of the American exchanges. But yeah, Luna's like basically at all-time highs, which is crazy. I mean, Luna was November 2020. Luna was 30 cents, and now it's $90.
Yeah, and that, if you're comparing and contrasting against AVAX, this thing sat at the 200 moving average for a long time and bounced. Certainly not a guarantee for AVAX, but that's definitely what you want it to look like. Like, oh, we're going to confirm support. Boom. Would I buy here though? I don't think so. Would you?
Luna or AVAX?
Luna.
No.
I know you. Yeah.
I'm not. I'm sorry. When someone else is at a 30,000% profit on liquid public markets, I'm not interested. I'm just not. They've 300x'd.
Well, that could be part of the reason markets. Part of the reason why Sol is doing what it's doing.
Because people are still in massive profit.
Well, yeah, and you've got endless VC dumping, just endless. Hashgraph is one I like to bring up a lot because they have exactly that, just endless VC dumping. I'm trying to find a good chart to even look at. Binance, I guess, but so like, I don't know how you trade any of this stuff within the back of your head, like, oh, every major VC in crypto has a bunch of this every month that they get to dump in perpetuity, right?
Mm-hmm.
Sol's the same way. Most of this stuff is the same way.
Yeah. I mean,
I keep asking about. Go ahead, sorry.
I think that Solana or Luna or Atom or whatever ones are the best, whichever ones last, right? One of them's going to pull in Ethereum, right? Ethereum went to $1,400 in 2017, and then it went to $85. And then it went to 4,500. So I just think that even if Bitcoin doesn't lose 30K for long, right? Bitcoin goes to 20K as its bottom, maybe 25, 30, who cares? So even in that scenario, there's no reason why Solana can't go from 250 to 25. No reason why not. Or 250 to 10. God, I don't know. Like, will there be willing buyers before that? Yeah, probably. It probably won't get to $10. But it can get to 50. It can get to 25. And it could still be the future. Now, I don't think it's going to go to $3 where you could have bought it in 2020. But I definitely think that it could get to $20, $25 and create another quasi-generational trade, kind of like Ethereum sub 100, and people were so bearish when Ethereum was under 100, so bearish. The whole market was bearish. It was like failed experiment, very near, right? And then it became a generational wealth creating trade. This will happen again. I think it's probably in progress with most of these coins. And what we want to be prepared for is how do we participate in that generationally positive event where it's easier because it's upside, not downside? How do we maintain liquidity? How do we seek short-term trades now with a bias towards cash or gold or Bitcoin or, something safer, so that you can then prepare to have liquidity and maintain the potential for a life-changing trade. Because we will get a life-changing trade. These coins, new coins, whatever. I think that's coming. I think after these periods of exuberance, which is all we had dog coins, NFTs, layer one trade, exchange trade, like cycle after cycle of different sectors that made gargantuan gains for people, some more than others, VCs more than all. That stuff needs to repair itself. And my fear is that it's down 50% for now is like kind of where we're at, you can go down 50% and then you can go down 50% more and it's 75%, and you can go down 50% more and now you're at 87.5%. Like, we've played this game before, Josh. I don't want to get stuck in it. I want to prefer liquidity, and I've been trying to take stabs, but honestly, I'm taking stabs on like very, very short time frame stuff, say on a Solana, if I think I can get a quick rebound. Short-term stabs on Ethereum or Bitcoin if I think I can get a move. But like I still prefer to be long over short. But if I can get a spot trade and make 10-15%, I'm happy. If I can do that half a dozen times, I'm real happy. Yeah. I don't have high expectations for the year. I still don't. I want it to be the bottom. I want this speech to be the bottom. I want to go to 150K Bitcoin or whatever. The world does not point towards that direction. The world points towards, if we get 48 to 50K, count your chips, baby, and enjoy them. Protect yourself. I hate it. I just think that that's the likelihood.
Yeah, I agree. But for this year, you've got, like we said already, you've got war in the Fed.
And neither of them is in your favor.
Those are not bullish things to be dealing with in any market ever. And if you're looking for high conviction TA setups, gold is the strongest thing that we've seen.
Gold's
from multiple angles.
Up, oil's up. Those are terrible pressures on markets. Terrible.
Yeah, oil, all those commodities. Just crazy.
There is a world where all of that stuff I talked about basically happens on the dollar side of things with altcoins, and Bitcoin does pick up a bid because people are like, why do I own gold? Like, Bitcoin is better than this. And maybe Bitcoin gets a dominance move and does okay. I really don't see the picture for most of these altcoins performing well on a relative basis. I have such a hard time with it. And if they do, then I think we're going to end up with a much longer bear market after that's done, right? Like, if everything bottoms and the market moons and peace in the Middle East, not in the Middle East, but peace in the East, and if the first thing to respond is a bunch of altcoins and stuff, then I think our eventual bear market will be even longer.
Yeah, that's fine for BTC. Let altcoins die, let dominance rise, let BTC range. That's best case scenario. Otherwise, it's just mega dumping terribleness across the board.
To Guy Lox's point, peace in the Middle East would also be nice. But yeah.
We'll take that too.
I'm sorry. I do not want to be a bear. I am long. I don't want to be a bear. I look at it and I just can't figure out how to justify the long. I'm sitting here, I'm trying to get freaking pennies in front of a steamroller right now. So I probably deserve to close and lose a little bit of money on this trade.
Well, the softer side of that is Ukraine-Russia comes to some sort of agreement. The Fed backs down from severe tightening quickly, and then markets rally. Right? But eventually the Fed's going to need to do something because they've done nothing. We'll say it like this. They haven't done the stuff they needed to do for months and years now. And now they're in trouble because they're against the wall. So,
yeah, there's cases that have been made that like, how does Fed get out of this, right? One, inflate your way out, pay off the debts with what you inflate. Probably not going to happen. Even though the inflation might happen, doesn't mean they'll pay off the debts. Two, ease inflation by causing a recession.
I saw that. I don't know if you saw the chart from, I think it was Bianco, that any 50% rise in oil has always led to a recession.
Yeah.
So you just get, let's end on that happy thought because I gotta go. But man,
thanks for being here, everybody.
Stay safe out there.
Yeah, be safe.
Stay safe.
We'll talk to you next time. Hopefully, we'll figure something out good between then.
Monuments crumble.